In this module, we're going to discuss long-term care insurance, which is also known as LTC insurance. Let's start with an example of a client that would benefit from this type of coverage. Matt and Sarah are newly married. Sarah's mother, Grace, recently suffered a stroke and needs constant care. She is unable to feed herself or go to the bathroom. Matt and Sarah struggle financially. Neither of them can afford to quit their job to care for Grace, and even if they could, it's too much responsibility for one person to take on. While Grace receives a small amount from old age security, it's not enough to cover the costs of the care that she requires. Fortunately, Sarah just learned that her late father, Tom, purchased an LTC policy for her mother 15 years ago. He paid for it in full, and it's still in force. Let's take a look at how LTC policies work. We're going to cover what triggers benefits, what an ADL is, what type of expenses are covered, what the benefit models are, the maximum coverage, and a few other odds and ends. So what triggers benefits under an LTC policy? Well, if the insured is unable to do 2 or more activities of daily living. I'll discuss these in a moment. And then satisfies a elimination period of anywhere from 0 to 90 days. And then benefits are generally payable. The policy covers certain types of care, such as living in a nursing home, up to a daily maximum cost. What are considered activities of daily living, also known as ADLs? In no particular order, they are, number 1, maintaining continence, which is controlling your bladder. Number 2, toileting, which is getting to and from, and on and off, the toilet. Number 3, bathing or showering. Number 4, getting dressed and undressed. Number 5, eating, by which I mean feeding yourself. Now, notice I didn't say cooking, I said feeding yourself. And number 6, transferring. This one requires a little bit of an explanation. If you can get out of a bed or a chair and into a wheelchair and basically move around without anybody's help, then you can transfer. Now, if you can do that without a wheelchair, then obviously you can transfer as well. To remember the ADLs, we have a great memory aid that we call the morning story. Assume your alarm clock just went off and you are running late for work. Think about all the things you may do. First, you would get out of bed and likely make your way to the bathroom. That's transferring. You may have to control your bladder while you wait for your kids to get out of the bathroom. That's continence. You're going to have to use the toilet, you're going to have to shower, and you're going to have to get dressed. And usually, as you're rushing out the door, you're going to grab something to eat. In other words, you're going to feed yourself. The insured can also qualify for benefits if they are cognitively impaired. For example, if they cannot communicate and comprehend either in writing, speaking, or sign language. My grandfather, for example, suffered from Alzheimer's. Some days he would seem perfectly fine to me, as though nothing was wrong. But on other days, not so much. One thing is for sure, he couldn't be left alone, and he would likely have qualified for benefits under an LTC policy if he had one. Next, we'll look at what type of expenses are covered. First, in-home care with care professionals visiting the patient. If possible, this is usually the first choice for most patients, and therefore it is considered the first tier of services. Second, respite care. This is if a family member is the primary caregiver and they need relief. In other words, a temporary replacement. Third, assisted living. This is a health facility where the patient has his or her own private residence, perhaps an apartment unit. This is appropriate when the patient needs regular assistance, but not around the clock. And finally, a nursing home or long-term care facility. This type of care facility is appropriate if the individual needs 24 hours supervision and care. LTC insurance only covers actual hard dollar costs incurred by patients or their families. There are 2 types of benefit payment models, the indemnity model and the reimbursement model. Under the indemnity model, the insurer pays the LTC provider directly. This means the patient is never out of pocket. Under the reimbursement model, the insured pays the expenses out of pocket and then submits a claim with the insurer for reimbursement. Now let's move on to look at the benefit amounts. The maximum amount of coverage provided under an LTC policy is calculated as follows. We take the daily maximum benefit and multiply it by the maximum benefit period in terms of care days, and this gives us the total maximum benefits payable under the policy. The insurance companies generally hold firm on the daily maximum, but allow flexibility in the number of care days. Let's take a look at an example. Norman's plan has a daily maximum of $400 and a maximum benefit period of 365 care days. Therefore, the maximum coverage under the policy is $146,000. Norman requires services that cost only $200 per day. The policy offers flexibility on the benefit period, so you can actually get more than 365 care days, which may allow him to eventually receive the full benefit payable under the policy. It is also important to note that the common exclusions for LTC policies are similar to those discussed under CI policies, and that COLA and ROP riders can also be added to LTC policies. By the way, can you remember what those acronyms stand for? In the following modules, we will turn our attention to extended health plans, such as dental and prescription coverage, and finally, business applications for insurance. Before doing so, let's take one more quick peek at the insurance needs pyramid. While some of our stories may be a little far-fetched, there is a method to our madness. Our hope is that some of the stories we discussed will help you trigger your memory. Now, we obviously haven't discussed life insurance here in the A&S video series, but for disability insurance, remember the story where we talked about how your ability to earn an income is probably your greatest asset. For critical illness insurance, remember the bionic heart. And for long-term care insurance, remember the morning story.